Hello everyone and welcome back to the Philippine Market Drop. Today we are looking at the market performance on Wednesday, December 3rd, 2025. It was a cautious day for the Philippine stock market with concerns over the national debt, the weakened peso, and the trimmed economic growth forecasts all weighing on investors' sentiment. Let's break it down. The Philippine Stock Exchange Index, the PSEi, fell sharply and closed at 5,905.84, down 88.56 points, over 1.48% from the previous day. The broader All Shares Index also slipped 0.3%, ending at 3,464.79. After briefly moving toward the 6,000 level earlier this week, the market pulled back again as macroeconomic concerns resurfaced. A major factor behind today's decline was the increase in national government debt. In October, the Philippines' outstanding debt rose to 17.56 trillion pesos, which is 106.78 billion pesos more than in September. One of the main reasons, the depreciation of the peso against the US dollar. When the peso weakened, foreign denominators obligations become more expensive in peso terms, and investors tend to worry about the long-term fiscal sustainability. The peso weakened against on Wednesday. It closed at 58.92 pesos per US dollar, softer than Tuesday's 58.52. It traded within tight but downward range between 58.50 and 58.92, with an average of 58.75 for the day. A weaker peso typically means higher import costs, heavier foreign debt burdens for companies, and foreign investors pulling money out of the emerging markets. All of these put pressure on the equity market. The Organization for Economic Cooperation and Development, or OECD, trimmed its growth outlook for the Philippines, 4.7% for 2025, 4.1% for 2026. Both are below the Philippines government's target of the 5.5 to 6.5% growth next year. This signals cooling economic momentum, and it added another layer of caution to today's session. Looking across the sectorial index, services led the drop with a minus 2.61%, financials declined 1.17%, industrials fell 1.04%, holding firms slipped 0.90%, property is 0.51%. The only sector that finished in the green was mining and oil, up 0.34%. This continues a trend where resource-related counters show resilience during the periods of currency weakness and global uncertainty. The day's strongest performer was Converge ICT Solutions, ticker CNVRG, up 3.63%, closing at 16 pesos. The most heavily sold names included DigiPlus Interactive, ticker PLUS, down 5.46%, International Container Terminal Services, ticker ICT, down 3.54%, Ayala Corporation, ticker AC, down 3.21%, Jollibee Foods Corporation, ticker JFC, down 2.87%, BDO Unibank, ticker BDO, down 2.75%. These are major index components, so their decline significantly pulls down the PSEi. Despite the index drop, trading activity remained healthy. Total value turnover 6.87 billion pesos, Total volume 889 million shares. Total trades 74,565. Market breadth was negative with 105 decliners, 86 advancers, and 46 unchanged. This suggests investors were not fleeing the market. They were simply rotating positions and reducing risk ahead of the key data. The big event to watch is coming Thursday, the release of November Consumer Price Index, the CPI. If inflation comes lower than expected, it could strengthen expectations for a more dovish stance from the BSP in 2026, which may help the PSEi rebound. If inflation is hotter than expected, today's cautious tone might be continued. Either way, Thursday's CPI print will be a major market catalyst. That wraps up today's Philippine market wrap for December 3rd, 2025. It was a risk-off session driven mostly by macroeconomic factors, the weaker peso, rising government debt, and the downgraded growth expectations. But with trading volume still firm, there's no indication that investors are stepping away from the market entirely. Thanks for tuning in. This is the PinChuTV Philippine Market Wrap, bringing you clear, simple, and beginner-friendly updates in the Philippine economy and the stock market. I will see you in the next episode. Salamat kayo, ang Pin.